You ready to learn how to trade a fair value gap? Well, I'm going to show you guys exactly how to do a bearish fair value gap in under 5 minutes. And this is going to be on Nike, ticker symbol NKE. Now, I've talked about bearish and bullish fair value gap, what they are, how to mark them up, but I want to bring you guys to an actual chart outside of the whiteboard to show you exactly how to mark that up. Now, currently, I am on Nike's 1 hour time frame. Now, let me say this. You can spot fair value gaps anywhere on the chart, and also you can actually see them happening slightly back to back, or you will just kind of see them all through the charts. But sometimes there will be some that are a lot more visible than others. You have a lot more to work with, and the range is a little bit better. Now, on the hourly time frame, we know that we have a couple of days of data here, so it could take a little bit of time to actually allow this thing to play out, let it retest back to those levels that it needs to retest to, so that you can actually act on the fair value gap playing out and getting back to those retest levels. I'll show you guys exactly how to do this and what to look for. Now, the first thing is that a fair value gap consists of 3 candles. Okay, it's a 3 candle setup that you want to take note of. So we're going to look at the bearish one simply because I just did a video whiteboard lesson showing you guys a bearish fair value gap. Now, the first thing you're going to look for is the very first candle. You see this big red candle here? That is candle 2, but this is something that you're looking for, a nice size move that was made, and then you look to the first candle before that and the one after. So the very first thing we're going to mark up is the bottom wick, okay, of this little candle here. That will be the very first level that you want to pinpoint. The next one will be the third candle after this little big one here, which will be at this point. That will be the second level that you want to mark up. Okay, so we're going to put that there. Now, we have established the FVG, the fair value gap, on our charts here. Now, what we're going to look for are 1 or 2 things. Me personally, anytime I trade a fair value gap, I like to see the first level get retested, which is this point, and then make my move. Now, you can also look for this level to get tested. Sometimes it can be a little bit risky, but sometimes it can play out beautifully. It just all depends on your game plan and what you want to do on that, okay? Now, we have our 2 levels marked up. Candle 1, we got candle 2, and candle 3. Have our levels marked up. Now we know where we want to wait for a retest to take place before we go short. Now, what do you see? Price is coming down, right? Push up a bit, come down, going up, and we finally get a retest right around this area here, and this thing does what? It rejects that level, and you see exactly what that level is that it rejected right here on the third candle of the fair value gap. And what happens? The price falls. Now, that little area is around 43.21. The price moved all the way down on this candle here before making another run to the upside to 41.83. Okay, that's a decent move, especially with a couple of contracts. If you're in the money, nice size delta, that little small move there on Nike over the course of that time, which would be from Tuesday the 19th, and it went all the way into Wednesday the 20th. So not very long that it took for this to play out, especially because we spotted it on the hourly time frame. Now, you can also look for the price to get up here and retest the first level, which would be here. And in Nike's case, that would be around 44.06. You will look for the test to take place up here, reject or break back below that level and ride it down, and look exactly where this thing came back to. Right back to that very first candle that we have right down here on that fair value gap, which is where? On our third candle, coming back to retest this and making another upside move. So this little fair value gap here was enough to actually act on multiple trades, but not saying to do that. It's just showing you that there are multiple opportunities here that was presented to you to actually execute. The best one would have been in this area, or even seeing a solid retest and rejection here and the price coming back down. We had some overkill, but overall it gave us a little gap down, came right back to that level, and that is where we would have been able to get out of that trade. So I really hope this helped. This is just to show you guys how to mark up and pinpoint the levels on a fair value gap on those charts. Before you go, Remember, I will be hosting a 4-day option trading class on July 20th through the 23rd. This will be 4 days, live classes, live visuals, and of course, you're able to ask questions along the way. Now, this class will close out on the 15th ahead of the July 20th kickoff because there are things that need to be shipped to you guys from a book as well as a t-shirt. Now, wherever you may be seeing this video, you're able to click the link, whether in my bio or in the description, to learn more about what's inside, what you get, when things kick off, how it works, so that you can grab your seat. At this very moment, there are about 30 seats remaining for this class. It was limited to 50. So grab your seat and I will see you inside. I hope this helped.